only for people who have been around for at least 2 recessions. Recession is coming. Hello mates, I was here reading this article and also studying multimillionaires like Carlos Slim and many others. They made tons of money in recessions, they bought business in recessions, and I was wondering what would I do if a recession was to happen in a couple of years or less. I sat there wondering what business would I start? What business would I buy? Would I buy real estate? Stocks? Gold? Silver? What would you buy? Real estate? Stocks? Oil? What business would you buy? Or what business would you start? What sells during a recession? In other words, what would you do to multiply your money? Why would you do that? You already know what I would do. I would buy real estate, triplex, fourplex, and single-family homes. Single-family homes appreciates the fastest. I would obviously use loans to acquire as much real estate as possible. I know a friend that made millions by buying a portfolio of homes when that market was at its lowest. He bought 95 homes, he sold some to invest into the ones that needed work so they can be rentable. Now he is worth millions, lives off cash flow. Don't get me wrong, the guy still has issues all the time with the homes. He said, I have 70 roofs, 70 acres as units to watch for, but it sure does cash flow. According to the facts in the article below, we would be entering a recession here soon. I think being in cash is more important than the vehicle. When people face the music, opportunities appear. Moral issues aside, when a recession hits, people need money. Payday loan companies and pawnbroking are two businesses that flourished during such times. For me, I think it would be property and land. The problem with preparing for a recession is that even if it's coming soon, you'll never time it. It might happen tomorrow, it might happen a year from now, or even 3 years from now. A better question would be, what are you going to do to multiply your money? Money is made in all kinds of economic conditions. There are still undervalued stocks to buy, distressed real estate or motivated sellers, etc. Waiting for a recession is like giving yourself a license to procrastinate. Sell lipstick or sell pizza. Both are recession-proof and sales go up during downturns. I think it is important to note that you need to make some money now before you get to the recession, or set up a business that is poised to do well in a recession. I personally own a real estate company active in WAS, Envy and GAN. We work specifically with bank-owned properties and servicing these properties for the banks and getting them sold when they are foreclosed on. I had to expand to 3 more states to keep the business going well during this real estate boom, but when the house of cards falls, I will be exceptionally well positioned just as soon as the government decides to stop propping the market up with artificially low interest rates and pumping free money into circulation through the Fed. The real question is, will you be able to keep your current income when this recession hits? What if you can't get a loan to buy any property? I agree that recession is on the horizon at some point, but the best way to be ready for a big recession is not to wait but rather to keep stacking all your chips every day in anticipation of being able to buy when the market turns. Buying cash-flowing rental property now is something that should also perform well in a recession. You have to be able to ride through the downturn and not need to sell it in the meantime. However, don't wait to buy that fourplex, because it really doesn't matter what price you bought the damn thing for as long as you don't ever plan to sell it. Buy a fourplex that will pay for itself and then pay you income every month thereafter. Ideally a diversified portfolio of developed economies, with middling durations 7 to 10 years, probably leveraged up for higher return levels, for example, implemented via futures. A recession is going to lead to central bank interest rate easing in order to spur growth. The mark-to-market value of the bonds will increase directly as a result of the lowered short rates. Recessions are also typically disinflationary. As a result, the yield income on your portfolio will have somewhat increasing purchasing power, helping the total return on the bonds. A diversified portfolio of global sovereigns will protect you against any idiosyncratic effects in a particular national credit. Assuming we're talking about a global recession, there will almost certainly be a correlated GDP drawdown in the developed world due to trade and market interlinkages, and those bonds will rally in unison. But it's better to buy across governments rather than put all your capital into a single market to get some diversification benefit. Cemeteries. Storage units. Win or win. In recessions, people sell their homes and need a place to put their things. In economic booms, they buy too much and need to store things. Almost everything is on sale during a recession. Having capital that you can redeploy to acquire them is the most important. Don't depend on lines of credit or refinancing existing assets. These may dry up during a recession as banks become more strict on lending requirements. On the other hand, current owners of businesses and real estate may become more open to the idea of owner financing, which would allow you to acquire and then refinance once the economy improves to pay off the owner. This actually takes almost all risk off of you, the buyer. I have lived through many recessions. During the 2008 recession, conventional real estate lending locked up. You may have gotten hard money or private lending. Cash is king. Also, trust in appraisals and comps was all screwed up. In some markets it was tough to put a value on some properties. In the recession around 1988, savings and loan crash, the government established the RTC and unloaded massive real estate blocks on the books for FSLIC. It was said that the properties were sold for 10 on the dollar. It was a time to buy, but you had to be in position to buy in bulk. Rec can be a great buy during a down market, but not all real estate and not all markets. You still have to be able to do due diligence. Real estate. Liquor store with check cashing and lotto. Lotto tickets, booze, handguns. Bingo. I work for a holdings company and they literally bought 6 facilities during this time. When times get bad, the valuation looks good for sellers. Amen. The next recession could be next week. Or it could be in the next decade. Prepping for it should not be occupying a lot of your mental energy. Get your house in order. Try to operate debt-free, and have free cash. Exactly, you can use hard money loan to acquire in real estate you can. Let's talk. I am in Arizona. Thank you for your words. I am currently debt-free. Place I live at is free and clear. My truck is free and clear. I do have a few loans on a few homes. A couple that I am flipping and a few triplex that I am renting out. They pay for themselves. My main focus right now is to try to stack up as much as I can so that when recession hits, buy up things that will multiply my income. It will be real estate, of course, but I am trying to see what else will be worth looking into. Are you guys talking about a whole storage business? Exactly, this is what one must do in a recession. Sex, drugs, and alcohol, right? Unfortunately, only one thing is legal. Let's stick to the legal one. A recession is a great time to expand, but only if you're prepared for it. Capital goods are marketed down. I've seen some deals for all kinds of equipment during the previous recession. 2 more employees are back in the marketplace for hire. I watched and listened as my previous employer scoured the newly unemployed searching for new talent at a bargain price. 3 opportunities abound when mismanaged businesses have to pay the piper. You can buy a business or stock in a larger business at much better rates. Obviously. P.S. Never buy gold or silver during the recession. Sell it. Thanks for your response. Isn't hindsight a bitch? Truthfully, I'd go into RE and stocks, for the simple fact that when the market is bottomed out, your stock can only go 2 ways. 1. Out of business, or 2. Back up. The level of risk you want to take is up to you. I'm in the airline business, so I got in my time machine back to 2008 and chose one of the American Big Three carriers, which was trading at around $3 a share. Had I invested $10,000 into this stock, I would today have around $250,000. Had I invested $1,000, I'd have about $25,000 today. Not a bad return. Definitely fulfills the unlimited upside or limited downside sniff test. Just pick a company that has reasonable chances for stability and a return when the market rebounded, and put some money there. The only issue with RE, as many have pointed out, is getting credit during a recession. In 2009 people could hardly get $1,500 credit limits on new Visa cards, let alone a mortgage. If you're not prepared to pay cash and fend off the ravenous gangs of bulk investors, you might not be able to get in on the action. BTW, who said a recession is coming? I haven't read it anywhere. Isn't another recession always coming? Do you think the global economy will continue to grow without ever attracting? History says otherwise. Recessions are a natural part of the economic cycle, inevitable, and unfortunately, can't be timed. Recessions come in cycles, but it's not like you can plan for it unless you're that genius off The Big Short who predicted 2008. It could be 10 or 20 years. Sure you can. That's what this entire thread is about. What would you do now to set yourself up for success when the next recession comes? There have been some solid answers in here. My personal thought is to have businesses that are high cash flow, so that when the next recession comes you can redirect that cash to new ventures and purchasing the assets of others that have over-leveraged, and now have to have a fire sale. If you don't believe that you can structure your business and life to be ready for the next recession, then how viable are you in the long run? This thread is an excellent exercise, if not for how you can grow in the next recession, at least for how you will act defensively. Like everything else in life, don't get caught off guard on something that you know will happen eventually. Actually, there's big fast lane opportunities in the business of death, an old industry, and an aging population. As for a recession, stuff just gets cheaper lol. If you have the cash, it's hard to not make money during a recession. My best years were during the last recession. I worry more about out-of-control inflation. I posted this at the bottom of the last recession. I've got a busy morning, but if someone wants to calculate the portfolio value today, I'm betting it's over $1 million from $70,000. 2.7 million. I agree with, I believe you can. I'm no financial expert, but I could see the '08 or '09 recession coming as plain as day. I got out of stocks early and redirected my investments into cash and bonds. Why? I saw friends getting new houses they couldn't afford and realized this is crazy, it can't last, the market is going to have to correct. Basically, do the opposite of the media and the crowd. Excellent point. What do you folks think will happen when the Fed pushes interest rates up a notch? Interest rates are going to stay down for a while because the stock market's inflated. Raising interest rates busts the stock market. Special interest groups think dudes like Buffett need the market to stay up because at the first sign of a dip, fickle average Joe investors are going to dump, causing a nationwide panic. Special interest groups hold the chips in Congress. If you're curious their role in this. Campaigning for a Congress seat is at its most expensive ever. Thus special interest money. Thus to prop up the markets, the central banks started buying stocks to add fuel to the fire. They're bidding up stocks. Banks hold very little gold, so they have nothing backing their paper. At some point, the house of cards will collapse. The cause of a collapse? Most likely an extraordinary geopolitical event, war, terrorist attack. Or a major bank collapse, one of the massive ones, WF, JPM, BOA. Until then, enjoy the paper gains. Car washes, from what I read a while ago when researching the business, appeared to stay neutral throughout recessions. This is a great thread. There's so much I don't know about everything, which is why I check the FLF at least once a day. Please do, I'd love to hear your perspective. Not looking to poke holes on a clearly unbelievable pick of stocks, but how did that break out to 8,264 shares of Citibank? Stock split or something? Furthermore, I'm more curious how you came up with them. Banks were pretty risky at the time, though the bailout made them less so. However, Sands seemed even more speculative. I actually followed Siri for a while, and in early 2009 the stock was about 10 cents or so, though my mind says 7 cents. I was in debt and had no cash, a negative, actually. Just another reason to, as mentioned above, get your house in order, get liquid, and get ready to buy when you can. You can plan for it. It always comes. Having a war chest of money is how you prep and be ready. It's kinda like number 2. You know it's coming, but you don't know when exactly. But it will come. I don't trust the official job or unemployment numbers either, and it's fairly obvious that this metric that has been adjusted to favor a particular outcome. I stand by my suggestion to do the opposite of the media and the crowds, and it's often the gut that lets you know when they are going to ask you. I'd say, trust your gut. Thanks for your comments. Rep Plus.